you, buddy?
How you doing?
Good. I'm doing fine, Peter. It's great to have you back. In fact, I want to talk about a few markets since the last time we talked. I know that you're a dollar bear, okay? And I remember our last conversation, I said, well, I know some people that are looking for a 117 euro or so, and what do you think could create this kind of drop? A lot of people are pointing towards it was just too crowded of a trade. Commitment of traders was very extreme long positions in euro. What's your assessment of what's going on here with the euro coming down from 125 to say 118.5? And is your view still the same on the dollar, that this might be a great dollar shorting opportunity?
Well, it's certainly I think a deserved contra trend bounce. Everyone hated the dollar, and then you had some not necessarily dovish, but people realizing that the Bank of England didn't raise rates, and the ECB is still going to drag their feet, and who knows when the Bank of Japan may change things. And then, of course, everything happening with emerging markets, with Argentina and Turkey, Indonesia. And that also obviously helped the dollar. At the same time, everyone's realizing, the Fed will just keep on going. The most interesting thing today is comments from ECB member Villeroy, who is the head of the Bank of France and an ECB governing council member, who reminded everybody that QE is going to be over by the end of the year, whether it's September or December. And the question of when to start getting rid of negative interest rates, he said, will happen in soon after the end QE, and not in quarters, not years, he said. And we're seeing and you add in the decision in Italy that looks like the League and the Five-Star Movement have finally formed a government, and they are intent on blowing out the deficit through minimum income, lowering the retirement age, and putting in a 15% flat tax. The Italian two-year yield today, on Friday, closed at minus 28 basis points. It is up 14.5 basis points today to minus 12. That is an extraordinary spike in short-term Italian interest rates. So the euro also is jumping back above 120 here. So I've been talking about a problem coming in European bonds for a while, and it looks like today was a major wake-up call for those people who are buying negative yielding paper, thinking they're going to flip it to some other idiot at a higher price.
Okay, so interesting. They're also floating an idea we were talking about earlier, Peter, of having a second currency in Italy, one for paying taxes. Any comment on that? And I was bringing up the last two-tier. I'm old enough to remember it, even though I wasn't trading it. The last two-tier currency system I remember was in France, and it was like they had one for domestic use that they continued to debase, and they had another one for international payments and settlements. Do you think Italy is really going to go this way with another currency?
I mean, I get, you have some rebellious politicians in Five-Star Movement who propose stuff like this, and I think it was hard enough getting the euro in place. I can't imagine them being successful in putting this in place. So I think it's more just jabber and talk and rebellious type behavior rather than anything that will come to fruition.
Well, I'm trying to think of what is going to weaken the dollar, of any fresh news or anything, and actually something popped up last week. What was your reaction to Bullard's comments that the Fed may not have to hike anymore the rest of the year? Is he floating a trial balloon, or it's not his Fed, but what do you think of that?
No, I mean, it's not new from what he said. He's alluded to this in the past. I mean, he still believes in negative interest rates, and so I'm not surprised to hear this from Bullard. He's an extreme dove. It was years ago when the market had a little correction, and he's like, oh, maybe we shouldn't end QE. So this guy's a dove, and I think he just reiterated his stance.
Okay. So what do you think is going to be the catalyst for a lower dollar then? Could it be?
I think it's really the blowing out of U.S. debts and deficits. It's an administration that wants a weaker dollar. I think people will realize that while the Fed is certainly tightening, the pace is so slow that don't look at that as necessarily dollar supportive. Inflation numbers are moving up higher here than they are in most other places, particularly versus Europe and Japan, and higher inflation is not good for one's currency. So while the Fed is raising rates, they're still lagging behind this rise in inflation, and we still have negative real interest rates, with CPI now printing above 2% now, at least at the core level, and the Fed funds rate at 1.625. So that's not really a good support for one's currency.
Okay, so basically, people will realize the con in confidence.
Yeah,
as they lose it, as they lose confidence with Fed policy, and
we also
it being able to keep up with inflation.
Yes, and also at some point, the Fed tightening will lead to an economic slowdown in the U.S., which will then end the Fed tightening, then lead to Fed cuts, and then that certainly will be very negative for the dollar.
Okay. You made a great call near the end of the interview. Are you surprised I remember everything you say in your interviews months ago? Anyway, you said, I took a look at the silver chart and it looked pretty good. And the next day we had this big spike. I called it the Boockvar spike, like the markings bottom. Since then, we've pulled back. And the gold silver ratio is starting to come in. I don't know if you have a comment on that, whether or not you think silver could outperform gold. Do you have a take on that?
Yeah, I mean, I think it will. I mean, watching gold and silver is still very maddening if you're positive on it. But when you look at this dollar bounce that we've had, and that gold is still 13.20, silver continues to trade very well in the face of this dollar bounce, and commodities generally trade very well in the face of this dollar bounce. I think that's a good sign for these metals, that when the dollar does resume its weakness, which I expect it to do, as I stated, that will be a nice boost to these metals, and silver always will give you a little bit of an extra kicker.
Haven't we also, Peter, though, gone through periods where gold could rally with a stable to strong dollar? And what's the catalyst for that? I mean, I have seen it where, wasn't it in the late 70s or during the late 80s that rates were going up and gold and the dollar were going down?
Well, some of the best gold rallies, best gold rallies occurred with rising interest rates.
That's what I mean.
In the late 70s. Yeah, in the late 70s, and look at the mid 2000s. The Fed raised the Fed funds rate from 1. By the time they got to above 4%, and the Fed funds rate, gold had already doubled. So if you were shorting gold because you said the Fed's raising interest rates, well, that was a bad trade. So again, you got to really look at real interest rates as a better gauge rather than the nominal level.
Okay, I want to talk a little bit about this because, I learn a lot from you every time I interview you. I do this under the guise that I'm edifying our community, but my selfish reason is it's intelligence gathering for me. And interviewed Chris Carolyn of the Spiral Calendar, and he said that he has found a pretty tight correlation between the U.S. dollar, yuan, and gold. Have you noticed anything? Do you follow the Chinese currency at all in any way?
Yeah, I follow closely. I do.
What do you think? What do you think of that possible connection between the yuan and gold? And this might imply one more shakeout in gold under 1,300 if the yuan makes a new low.
I mean, I think at times there's a correlation. There's times that there's not.
Yeah.
I don't think there's any long-term real correlation of note for me to put my finger on. So, yeah, at times that these correlations do work, and there are times they don't. So, I think bigger picture, the dollar still is going to remain under pressure, and that the precious metals bottomed in December 2015. And what happens in the short term, if there's another so-called shakeout and gold trades back below 1,300, fine. But we've just had a really nice dollar rally, and gold really didn't break 1,300.
Yeah, so yeah, I'm thinking it would imply after this respite one more surge in the dollar. And talking about the dollar, And moving over to stock indices, Peter, the Russell's knocking at the door of a potential new high. And part of the reason is it seems to perform better with a strong dollar than with a weak dollar because it's domestic, it doesn't have to import. So maybe a cue for when the dollar is going to turn bad again would be the Russell. But if you're a dollar bearer and you also think that there's, could be problems with rates and the stock market, this could end up being a great shorting opportunity when the dollar turns, don't you think, the Russell?
Yeah, and I understand people buying it because of that, but people understand that the Russell is very sensitive to changes in economic activity and also in interest rates. And of Russell 2000 balance sheets, about 40% of the debt is floating rate. Well, anybody who has looked at LIBOR has seen that that LIBOR has gone up, has basically doubled over the past year. So the cost of capital is going up a lot for a lot of these small companies that everyone's piling into. So you have a rise in interest rates that's going to be impactful to their cash flows, and growth that still remains mediocre, and a Fed that continues to tighten, and an index that is very expensive. So, outside of the short-term algorithmic, machine-driven rise in the Russell because the dollar's bouncing, I think people should really expand their thoughts on whether this is self-sustaining or not. I'm not of the belief that it is.
Okay, so the Russell leading the way, I don't know either because I've rarely seen the Russell lead the way. If it means anything, if it's constructive. I always thought they were more of the speculative type stocks, at least they used to be, more tertiary and higher risk stocks. So maybe it's more of a sign of animal spirits and speculation because
yeah, that's what it is.
Is that what it is, buddy?
A big chunk of Russell 2000 companies don't make any money.
Okay, so that's speculative. So everything's on the come there. And then I look at the NASDAQ 100 here, Peter, and for a while I've been saying I think that we have a shot for one more high. This was, drive one, drive two. I know guys that are looking for a failure here around 69.90, but I'm looking for one more high around 7,300. But that would leave the market in a position, Peter, where we have the Russell making a new high and the NASDAQ 100 making a new high. But both of those events could definitely occur without the S&P making a new high and without the Dow making a new high, and I'm sure there's other averages. And I think this will be the first time in a long time that the S&Ps weren't leading and the Dow leading to make new highs and are lagging by that much. What message do you get from that potentially we're going to make new highs in Russell? That looks like a layup, and possibly in NASDAQ 100, but both the S&P and Dow do not look like they will.
I mean, it's a good question. I think the stronger dollar is where the bounce in the dollar is going to potentially impact the big Dow stocks and the big multinational focus of the S&P. So maybe that's one explanation. While the NASDAQ, while still susceptible to the same issue, is obviously being driven by, again, 5 or 6 stocks. I think that the most important thing people continue to have to pay attention to is that the monetary tightening is beginning to pick up, particularly with quantitative tightening going to 90 billion this quarter and 120 billion in a month and a half. And being reminded again that QE in the Europe is likely going to end in September, the latest December, and that negative interest rates next year are going away, and that these are all major headwinds. So yeah, try to scalp out maybe another run to the highs here, but to me, risks are growing tremendously with this rise in interest rates, with this monetary tightening, and people just have to be careful and be very nimble if they're trying to catch long side moves here on pure momentum, from pure momentum reasons more than anything else.
Isn't this monetary tightening, Peter? Look at my screen, $71 crude. A few years ago when crude was in the toilet at $25, $30, all commentators were saying that's a tax cut. That's a tax cut that that consumers were getting. So isn't this a tax increase and also kind of a tightening in the economy with a bull market happening in crude?
Yeah, I think I read in the Wall Street Journal that about a third of the tax cut will be offset by the rising gasoline prices if gasoline prices stay at current levels. Now, hopefully we see higher wages, but yeah, you can't look at a tax cut in isolation and then there are offsets. There are offsets with oil. Anybody who uses a credit card and doesn't pay their monthly bills in full is seeing higher credit card interest rates that will also be an offset. So you can't do an all else equal analysis when you're looking at the tax cut because of some of these offsets.
Okay, so I wanted to show your website for people to subscribe to right here. But I also know that you have a new venture going as a RIA, correct? And
yeah, CIA of a wealth management firm.
Okay, who are you working with there? Anyone that we would know? Huh?
No, nobody that you would know, but
okay,
good start so far.
Okay, good start. And people could contact you. You don't have a minimum. You accept all kinds of accounts, retirement accounts, cash accounts, everything.
Yeah, we do full investing, planning, insurance, and all that. I'm obviously focused on the investment side, helping people create portfolios and doing my own investing for them, as well as in a broader type investment plan. So anybody looking for a new advisor or firm should certainly reach out to myself and us, and we can help out.
And with your commodity theme, Peter, are you playing certain commodity ETFs to the long side? I know you mentioned agriculture last time, I believed. You really are bullish commodities here and think it's embryonic, don't you?
Yeah, I think there's been a big reduction on the supply side in commodities the last couple of years. And so this is more of that rather than a big increase in demand, but you do have some decent demand, which also certainly is helping. So one agriculture ETF, and then there's some more general diversified commodity ETFs that I think are attractive. Now, these are tough products in that you have the futures role that always clips you. So you sort of rent commodities as opposed to investing in commodities.
Or instead of marrying them, you just date them, Peter?
Exactly.
All right. So thank you for making this date that we didn't have scheduled today, Peter, and filling me in and our community with what your thoughts are. You still have a lot of conviction about commodities, and if we got a break to 1280 gold, you would like that, and you're still positive silver, and you think that this dollar rally still is in a structural bear, and this is just counter trend. Am I reading you correctly?
Yes, that's correct.
All right. Well, thank you again for your time, Peter. Everyone, thank Peter for his time today. Could follow him at Peter Boockvar, and you want to give the name of the RIA again, Peter? Maybe you could put it up on your website up here, so next time I could show it.
Yeah, it's a Bleakley Advisory Group, and the website, as you can see, is bookreport.com.
Okay, so all you have to do is get a hold of Peter if you're interested in having him manage your money with the great eye that he has. Give Peter a call and discuss it. I think he'll do a great job in this transition period from one-way streets in the market to knowing what sectors to be in at the right time. So thanks again, Peter. Have a great May, buddy. Good hunting.
Thanks. You the same.
Okay, everyone, that's a wrap. See everyone for Turnaround Tuesday.
Dale. Sorry.
Oh, yeah, I'm sorry. Stel wanted, we're going to wrap it. Stelio had a correction.
No problem. Sorry. Yeah, I just wanted to correct what I said about Mexico. I think what I read, I probably misread something, is the current president cannot actually rerun for president. So, but I did read that there was a 20-point poll by somebody, and this happens to be a leftist guy who used to be the mayor of Mexico City. But basically, my point was that the race doesn't seem to be very close so far. But obviously, we know everything can change. But yeah, sorry about the slight error, and thank you for the people who pointed it out to me. We cannot get everything right. We're only human.
That's true, Stell. And you know, I went to a Mexican barbecue and we were having such a hard time because the beans kept slipping through the grill. So anyway, thank you for the correction. Thank you, F.A.C.E. Thank you, F.A.C.E. Thank you, guys. See you tomorrow. And remember, don't just count your pips, count your blessings. Remember, if there's not much to do, don't worry about it. You'll end up getting slapped in the face with a good trade. And I just want to mention one more time that this webinar is being sponsored by Forest Park FX. They're the broker with your broker solution. So if you're not comfortable with who you're trading with, get a hold of Trent and he'll find someone to meet your demands in this demanding industry. And that's a wrap. See everyone tomorrow for Turnaround Tuesday.